Good afternoon. What we have is the S&P 500, and we're going to take a look at the calendar year so far in January and February. Happy Valentine's to everyone. Now, we have the S&P, and what happened is that we started out the year extremely overbought going into a January, something we haven't seen for a while. So when we were on the S&P, we were 1850. On 2-3, we hit 1739. Since we hit that low right there, that peaked the S&P into a deep short-term oversold area, which we haven't seen for quite a while. So basically, when that happened, stocks got on sale. So in a very short term, we have worked this oversold condition off a little bit, but we're right up here. This trend line was the 5-day consolidation breakdown to that low. Now we've had a number of days. We had this low right here was 1737. And we've had 1, 2, 3, 4, 5, 6 days going up. It is a classical oversold bottom. And not only that, we are going to hit some key resistance areas. The economic data that came out today was not good at all. However, they'll blame the retail sales was poor. They're going to blame it on the weather. The bottom line is this. It was a buying opportunity here in the S&P 500 because why? We finally got to a very short-term deep oversold area. Now, when this pops that buy signal, that's going to come up here and test the resistance levels. And I'm going to show something right here. When we take a look at that top, we are going to come in here right now. So basically, when I draw the trend line right here, that's where the low of that body was and the high of that body there. And we're just ever so slightly up above it. Now, this part of the chart over here is going to be key right here. And let's just show this part of the chart for right now. This is where we had that strong resistance at 1850 on the S&P with a very narrow range pattern. And once they get that tight in a consolidation, either they break up or they break down. However, at that time on a daily level, we were overbought. One of the things that I'm going to show here now is I'm going to just pull this part up because it's very important to understand the daily moving averages. So we broke down below the 10. We were down below the 50. That's the white line. And there's the 20-day, the red line. Here's the 10 and here's the 100-day. Now, on a daily level, we broke and violated every one of those moving averages when we reached that deep oversold turn right here on the S&P on 2.5. And we can see here where this is almost going to go back into a daily buy signal. Now, that 50-day simple moving average, my friends, is 1810, and we closed above it. As a matter of fact, we closed at 1829 today on that S&P, which 1810 is that moving average. That's a significant moving average. It broke it. One of the things I will show is we had cleared at 1777. That was the value of the 100-day moving average. And when we got above that 100-day and that 10-day and they started to flatten out, they separated, that narrow range day started with that gap up, and we took out all of that resistance level that was your 50, your 20, and your 40 days. Simple. Now we have support. And one thing that is bullish for the bull is the fact that we have finally made a nice range for both the bull and the bear. And that 2014, once again, is going to have various different calendar months are going to have a lot more volatility than others. It's not going to be a straight up move like it was in 2013. We said that way over here on the very first trading day of the year. So, one of the key elements is how far do we go above the January high? That's yet to be determined. But there'll be a lot more buyers that come in the marketplace, and the earning season is winding down. So, therefore, we're about ready to hit, we're minus 2.3 on the moving average convergence area. And when we were over here, the percent GS was on sale at 13.77. That's the green line. And it crossed up and it went, and it's now right here. As of now, it's at 76% DS. And there's a relevancy. This is the standard world of technical standard deviation. We are market makers, so we use a little bit different than what the rest of the world uses. So that is the major resistance level. We're about to pop a buy signal. The bull is definitely back in control.